Hello everyone, today we'll be talking about the upcoming Federal Reserve rate cuts and how low will the rate go. The next FOMC meeting is happening on July 30th to July 31st. Federal Reserve is not expected to change the interest rate. It's going to stay at the 5.25 to 5.5% range. But Federal Reserve is expected to prepare the market for the first rate cut in the next meeting, which is September meeting. So how would I know that? Because Vice Chair of the FOMC and the President of New York Fed, John Williams, has signaled in his recent interview that a July reduction wasn't warranted, saying officials would learn a lot between the July and September meeting. He has also mentioned that the Federal Reserve have currently faced two-sided risks. On one side, loosening policy too soon will allow inflation to flare back up. That's like not having inflation under control. On the other hand, waiting too long to ease the monetary policy would contribute to significant economic downturn or recession. Right? That's overdoing it. Right? So the Federal Reserve is carefully looking for a balance between the two risks. So what is the basis for the market and the Federal Reserve to project a rate cut? Because the Federal Reserve have two mandates. Number one is have the price under control. Number two is to have maximum employment. If we're looking at the price, the current U.S. inflation is at a sufficient level for the policymakers to change course. And this chart shows you the PCE, which is the inflation measure looked at by the Federal Reserve. And as we can see, the core PCE inflation was down to 2.63% year over year, and the overall PCE index compared to a year ago was down to 2.5%. So it's actually getting very close to the 2% long-term inflation target. On the other side, U.S. appears to have a pretty strong economy with a caveat. Right now, this chart shows you the U.S. real GDP seasonally adjusted annual rate. And in Q2, which is the latest report, Q2 2024, we can see that the GDP annualized growth was 2.8%. It's higher than expected 2% annualized growth, meaning that United States of America's GDP growth is still holding up, okay? And consumer spending, which attributes to 2/3 of the U.S. GDP, it's still holding up strong. But there's a catch to it. Which is, if you look at the delinquency rate of credit card loans for all commercial banks, it has risen to a level that's higher than the pre-pandemic level, right? So right now, 3.16% of the credit card loans are defaulted, which is above the Q4 2019, right before the COVID. The rate was only 2.62. Let's look at the market expectation. The probability derived from Fed funds future shows that there will be 325 basis point cuts in 2024, which will happen in the last 3 FOMC meetings of the year. They're going to happen in September, November, and December, and the probabilities are written here for each of the meetings for 25 basis point cuts. Now, the big question is, okay, they're going to start cutting soon, and they're going to continue cutting until what level? Because you cannot cut forever, right? So where will the final rate level be? So in the recent interview Powell did on July 15th, he mentioned about where the neutral rate will be, because neutral rate is a concept that describes a policy rate that neither promotes economic growth or restrict it. Meaning the neutral rate is where the interest rate will finally land. Powell believes that the neutral rate has moved up compared to the period between 2008-2009 financial crisis and pandemic. He believes that the current rate of 5.25 to 5.5% is restrictive but not severely restrictive. So how much is this neutral rate? Powell didn't mention on the interview, but in 2018 and 2019, historically speaking, for that 2 years pre-pandemic, right, it was believed to be 2.5% for the neutral rate. So to understand the current neutral rate of Federal Reserve target, we can look at the latest dot plot from their economic projection. The latest dot plot come from the June FOMC meeting. And as we can see, here is actually where they indicate where the neutral rate or the final terminal rate will be. As we can see, the median projection, right, the median from these dots is actually at this level here, which is 2.75%. Okay, so this is what Powell was saying, right? He think it's going to be a little bit above what the old neutral rate would be, which is 2.5, right? So right now is 2.75 as a median projection. Okay, thanks for watching my video. Hopefully the information is valuable to you.